Good afternoon, everybody. Welcome to the TraderMerlin Show for your Monday edition. We are on the 13th of June today. A little bit of a bloodbath out there. Man, I tell you, I leave for one day. We have a little breakdown outside that yellow box on our Thursday session, do a show about that, and all of a sudden things just continue to implode from there. So lots to talk about with regards to overall markets. I'll just dangle a carrot there. I actually closed out my short position today, and actually two short positions, and this is going to sound crazy, I sold puts today, expecting there to be a bounce. We'll talk about that as we progress through today's show. But good to see everybody. Good to see you, Terry and Ron. We got Dana, Joe. Oh, we'll get to that question. Definitely talk about trend trading today. We got Gary Pepper, Katoot. Joe, Big Eb, good to see you back, my friend. Sorry I emailed you late. I was up in Northern California digging in the trees and out in the woods. I got a 42-acre piece of property up there with my dad, so we were cleaning that up, getting all ready to sell. Great weekend. With the family. Of course, that's the important stuff, is spend it with your loved ones. Tomasino, Bus Pupo, we got Rob, Les Gold as well, and Alan, who beat Les to the first one to the chat today. Good to have you all here with us, and those that are lurking in the shadows, welcome to our Monday edition of Market Panic. I know it's a crazy one out there. I love it. I think that the fear is just starting to bellow up and get even more intense, and we look at some of these numbers today. It's absolutely ugly, and I love it. Let's talk about what happened out there overall. Let's take a peek at the charts here to begin with. Here's your S&P 500, which on Thursday, I actually drew out these levels, and let's just play devil's advocate here and zoom out to where we were on Thursday. That's where we finished when we did the Thursday show, and I said, we do have some targets down below on that S&P 500, which is clearly where I thought things were headed. You can see we've got between 38.90 and 38.70. Little 20-point range there. And then, you, of course, have the bigger demand zone, which I think is more significant, between 38.05 and 38.44. Well, yesterday we ripped down pretty much to 3,900, and then today, good night, Irene, we ripped down below those lows, and it just kind of makes you wonder, what's going to happen here in the longer term. Now, you'll notice off to the left-hand side, right around March 4th and 5th, we had an area where it ripped up aggressively, and some are saying that that is a strong demand zone. I disagree. I don't think that that's a strong demand zone, but I do think that it is a demand zone, and I'm kind of counting on that for Friday. And again, I'll tell you later on about some of the adjustments I made to my account, some of the trades I made today. All in all, a great day for me because I had been short. Let's see. We'll start with, that was the S&P, 3.7% down, but I'm going to start here with the apocalypse, which is on cryptocurrencies, Bitcoin. Again, I have been in the camp of saying I still think we're going lower. I think we're going considerably lower in crypto, and there's a lot of bad news going on in the crypto world. You notice that Bitcoin today fell right to that line that we had out there at 23,625, which was the origin of this huge gap going back to December of 2020. Now, you'll see here it says down 19%. Well, this is futures, so futures don't take into account what happened on Saturday and most of Sunday, so it's a little bit misleading. It's not down 19%. It's down 19% since the Friday close, so certainly a pretty ugly day for crypto, and this is one of the better performers. When I scroll through here, you'll see a lot of, since these don't have Bitcoin futures, all these cryptos here don't have futures products to them. Some of them are down dramatically. Celsius is another one that's getting absolutely slaughtered out there recently. You've got Crypto.com and Curve all down double digits today. Ethereum, 13%. I actually put a moratorium on all my crypto purchases except one. I will have I can still buy consistently and happily, I'm going to buy Bitcoin. Ethereum, though, not going to happen. And you guys notice, this is the picture we drew on Ethereum on Thursday. So go back to, let's see, I got to look at the damn calendar. I can't even tell what day is what. Thursday was the 9th. It was the last show that we did. And where were we on Thursday the 9th? We were right here. And we'd drawn this little descending triangle. And the rules on descending triangles is generally things will continue in the direction of the prevailing trend. In this case, not a rocket science class here, trend was down. So the higher probability was that Ethereum was going to break to the downside, and then all of a sudden, Friday we broke down. Saturday we just started to crush down. Sunday and then Monday, we were just falling apart with Ethereum. It was at 1,800 on Thursday, and we hit a low intraday of right around 1,200. I think it actually went to 1,100 and something. Yeah, 1,163. So really, really, really bad news for any Ethereum holders, including myself. I have a sizable position in Ethereum, so obviously this was very costly for me. Good news is my average price is significantly lower than this. But, begs the question of what's next for Ethereum. This line had been drawn here, and that's where we kind of bottomed out today. Does it get all the way down to the 740 mark? That's kind of my next big stopping point is 740 on Ethereum, and it's just a real ugly day. There's a lot of factors out there. Time permitting today, we'll look at what some of those reasons were, what happened with Celsius and Binance and some of the freezing going on there. I was looking for a move up to the gap in Ethereum. So let's go back to, I was still on ETH here. Let's zoom out a little bit. I got to ask which gap. So you're talking probably the futures, since I don't usually look at the futures there. Where did he go? Who, me? I'm here. Did I cut out on everybody? Hopefully everybody still hears me. Do you short using Bitcoin futures? No, I'm not short crypto. You can use Bitcoin futures to short it. That's pretty much the only way for anybody here in the United States would be to use the futures market. If you are a little more experience in crypto, you can be using some of these decentralized exchanges or some exchanges around the world that don't require KYC, know your customer, or AML. So you can, it's a good question, Pepe. I'll get to that in a second. Or AML, and therefore you can use leverage and shorting on some of these international exchanges. But there you go. Merlin, so you're holding long-term bullish in Bitcoin? Yes, Mario. So Pepe, a couple different reasons. Number one is I'm in it for the long haul, so I'm not concerned about these fluctuations at all. It's funny, I went to lunch today with Larry Jacobson, and he's like, you doing okay? I'm like, why, what's wrong? He's like, yeah, I saw crypto. I'm like, oh, I don't care. That really, this means I could care less. This doesn't mean anything to me. This could keep on dropping and dropping and dropping. I'm not concerned at all. I'm really, my vision here, as I mentioned, is 5 to 10 years. So I could care less. I'm pretty certain off my modeling that it's going to continue down and that it'll flatten out, and then we'll have the next huge move up in a few years, and I'm fine with it. This account, all the money I have in crypto is just there as, I'll call it play money. Of course, I think much more highly of crypto than it's just a play asset, but I'm not concerned about it. So to Pepe's point, which is great, he says, not sure why you keep your trades in crypto instead of getting out, buying lower, or shorting. Any thoughts? Number one is I'm too active. I got too much going on, so I can't actively go out there and trade crypto with all the other trades I'm doing with options and equities and futures, and it's too much for me. So that's what I like my perspective on crypto is. I'm definitely much more of a buy and hold. Every now and again I'll be a little bit more active with my trading, but in this case I'm looking at crypto as a DCA, dollar cost averaging type of play for me. But again, I'm not buying any new crypto. Only Bitcoin, and I will continue to add to Bitcoin because of the math behind it and the stacking of stats. So when this does turn around, we'll jump on. Hopefully it'll be, hopefully I'll be in the right place. I could be wrong, but I think that there's a fairly high probability that I'm correct in my long-term prognosis. That said, out of the 39 plus cryptos that I have, some of those might disappear. Some of those may just fizzle out. I think what you're getting right now in the crypto space is just an overall shakeout and a lot of realization that most of crypto is trash. Most of crypto is useless junk. I'm hoping that I don't have any of that in my portfolio, but the odds are probably there that I do have, some crypto programs or digital assets in my portfolio that just aren't going to make it, right? Not going to make the cut. But that's a risk I was willing to take early on. But yeah, that's my attitude on it, and I'm sure that may not reflect everybody's opinion, but that's mine. So let me keep moving up here. Let's go to the Russell 2000. I had some Russell, I had some S&P. The Russell was the main one I wanted to close today, just because you look at this price chart right here, it's a real aggressive, painful sell-off on anticipation of the Fed. I know a lot of you talking about the Fed funds rate jumping 75 basis points. Probably not going to happen, and I'll show you that here in just a second. So I actually am playing a double bottom here on the Russell. I think it got a little too emotional here with regards to selling. Notice the spike in volume here. So it's definitely, you can't really see it because today's price action masks it. Let me see if there we go. You can see that today we're getting a little bit higher up in volume. Not that it's climactic by any stretch of the imagination, but it certainly is much higher than normal, which would be right around where my cursor is. So this looks actually getting to more of a climactic moment here with the E-minis on Russell, but right in area of demand. So I'm okay with this. Obviously these last 4 days have been absolutely fantastic for my short position. And closed out I was long puts, so I closed puts out today and actually sold some puts. So I was long puts, now I'm going to be short puts on the Nasdaq 100, which I'll show you here in just a sec. Here is the Nasdaq 100, by the way. So you can notice that the big difference here with the Nasdaq is we broke those lows. So you can see here on the, gotta zoom in just a hair. Sorry if I'm going too fast. I had Dr. Pepper today for lunch. Got me going. On the 20th of May, we bottomed out on the Russell 2000. At the time, we don't know that we bottomed out. It's just, that's in hindsight we do. In today's action, we ripped below that. And that's pretty important, especially when you look at the bigger picture. It's like, well, where are we going to go? So you can see over here, you got like 11,100. This is kind of the low point we saw on October 30th and November 2nd of 2020. We could see that very, very soon. I think that we're a little overdone. That said, we do have PPI numbers tomorrow. We've got the Fed on Wednesday. We've got 2 other central banks on Thursday. It is a landslide of crazy economic data. It should have you excited. I should be screaming just to keep up with the energy of the market. But NASDAQ down 4.2% today alone. And then gold. I was kind of surprised to see gold tank like this. Let me get that line off of there. Let me take this. Where is it? There's that giant red candle. I mean, this is like the mother of engulfing patterns. So gold had been slowly traversing up for like the past month. And all of a sudden in one day, gave it all back. 2.95% slide for gold. 1820 is where we closed at. We were at 1880. Yes, earlier this morning or late, right around midnight. 2.95% slide on the day. Pretty ugly, but still not the end of the world in my opinion. Same thing with my silver trade, unfortunately. Now, S&P 500. And I'll get to all your chat in here in just a second. The SPY is an important one as well. We already started here because we broke below those lows. This has me a little bit nervous. I kind of was hoping that this would have stalled right around that 3,800 mark and bounced up. Right now we're at 3557.5, which is down 3.67 on the day. But if I look off to the left, again, I'm eyeballing this area of demand. And let me just draw a horizontal line. I got so many lines here. I just want to make sure I got the right ones. Let's snap this to the lows we saw back on March 4th of 2021. And I think that that's really where we're going to see this thing bounce. I kind of feel like we're in a demand zone right now on the S&P 500, which again is the other reason why I closed out my put position and sold some puts. I sold my puts against the Nasdaq, by the way. So just so you guys can see trade in full transparency. I'm being extremely aggressive on this trade, by the way. I just want to make sure everybody understands how aggressive this is. I looked out at the triple Q's options chain today, and I saw the 269s. So it was the 269s expiring this Friday. So really, I got 4 days. Was going to pay me about 1.2% rate of return to commit myself to buy at 269. And the reason I did that, I know a lot of you are like, what in the hell are you doing, Merlin? That's way too aggressive. When you have this panic selling, you've got 2 runaway gaps on the Nasdaq futures, or sorry, the ETF here. And what I mean by that is it gaps and runs, and gaps and runs. And now we're at the 3rd day in a row. Some people call this 3 black crows. And normally on the 3 black crows, you get a nice little bounce here. Now, we're not exactly at a great area of demand on the triple Qs. Nasdaq futures looks a little bit different. Right, you can see here because of the gapping and the 24-hour trading, the futures look slightly different. So I kind of have the mindset that here we are sitting at an okay demand zone. Not anything that's like epic, but it certainly is one of the more decent demand zones we've seen for quite some time on the Nasdaq because it just hasn't been touched yet. So I'm keeping an eye on that one. And again, that's why I sold the puts on the triple Qs. And my price on those is $269 expiring Friday. So I will draw a line right there so we can keep an eye on that one. But 1.2% for 4 days, I'm fine with that. It's just a lot of risk. Don't you think it will go lower with the Fed this week? Good for my 380 SPY puts. It really could. It could absolutely go lower, Jeff. And this is the gamble. Here's why I did it. I want you all to think about everybody that you communicate in the trading world. Think about all your friends and people in the world, maybe even people that aren't in the financial markets. What are they thinking right now? What's their thought, right? My feeling is, and I apologize for cursing, it's just who I am. I'll try not to drop F-bombs, but I'm definitely going to drop the S-bomb. My feeling is that most people that I talk to in the financial markets right now are going, holy shit, I got to get out. Oh my God, I got to get out. I'm panicking. I'm selling. I love that. Do it. Unload. And I think it's gotten a little ahead of itself. I'm not saying that this is done. I personally think we're going considerably lower over the coming months. But do I expect there to be a knee-jerk reaction? Yeah, I think you're going to probably see a bounce, maybe one or two of these little gaps close here. I don't see anybody out there. I don't see one person. Who knows, maybe even Jim Cramer is going to be this guy. But I don't see one person out there going, dude, this is a great time to buy. These markets are screaming deal right now. I'm loading the boat. Most people are freaked out, right? Most people are freaked out. Hey, good to see you, KNS. It is definitely a long shot. I am very bearish in the intermediate and long term. For the short term, I'm expecting there to be a bounce. That's just me. That's how I'm playing it. Call me crazy. It's okay. I don't take offense to it. I am crazy. Just let's not curse at me and call me all kinds of bad names. But, we'll find out by Friday. I'm either going to be right or I'm going to be wrong. It's binary, right? When we do Friday show, and yes, I'm doing a Friday show. I can't do a show tomorrow because I got a corporate meeting I got to get to as a leadership team. But Friday show, you guys can either say, you idiot, Merlin, or, hey, nice trade. You got 1.2% for 4 days. Great. Good job. So Kathy Wood still seems bullish. Okay, Pro, you got me. But you got to be honest. If you are Kathy Wood or any Warren Buffett or anybody who's got a massive portfolio, especially a fund manager, you have to convince everybody that markets are great. You think Kathy Wood's going to sit out there and go, oh man, we're screwed. You guys should sell everything. What's that going to do to her portfolio and her returns? It would erase all of it. Let's look at ARK Fund. Here's the ARK Fund. You think Kathy Wood right now is screaming that this is the end? No. And by the way, this little blue line right here is where Colin Teddards of Investor Videos was saying, this looks like trash. Sell it. Now we're at $36. Goodness gracious. Keep on diving here. Yeah, Kathy Wood is always going to be a cheerleader. She has to say go long. It's her job to make people buy the ARK Fund. She gets paid off of people who hold it. And if people are selling the ARK Fund, she don't get paid. So she needs as many people as possible to buy this ARK Fund. Good for her. Good for her. Keep being a cheerleader. You're nuts. It's okay, Chris. And I'm nuts too. Merlin, you're looking at quad witching. I'm not putting my weight on the quad witching. That's not really weighing in on me. You tend to get really volatile wild weeks during those periods of time. I'm just looking at stepping back and looking at what the mass psychology is saying right now. When I woke up this morning, I got people texting me and freaking out. What are you doing? Oh my God, market. I'm looking at it going, wow, down 4% on the Nasdaq? Down 10% in 3 days? Okay, that's slightly overdone. 10% in 3 days, that's like pandemic sell-off, right? When we first got into COVID and the thing was just dropping like a rock, you're talking 10% in a day. We'll get 10% in 3 days. That's so far out of standard deviation that normally you're going to get a pullback there. But that's just me. I could be totally wrong, and I'm fine to swallow my pride if I'm wrong on Friday's show and be like, okay, I'm going to be put these 100 shares, or not 100. How many did I get? I sold 2. I only sold 2, so it's not like it's a big trade. I sold 2 of the Nasdaq 100, so it's not like it's a big trade at all, but it's just one. I wanted to have some skin in the game, see if I'm right with this bounce, but, nice. Kathy and Kramer, match made in heaven. Yeah, let them get married. Let's see what happens there. All right, I didn't even make it to the top of the list here. There was some positive stuff. Let's go up the list. We went to gold. We talked about we don't really need to talk about Dow. Dow looks pretty similar. I mean, it actually did break through that demand zone that goes back to the 3rd and 4th of March, so not that happy to see that. But final, go to oil. Oil was a nice volatile day today, so it was like just ripping back and forth, but ultimately it was a positive day. We did have something that was positive on the session. Gotta love that. 0.35% for the crude oil futures right now. Again, trend is your friend to the bend at the end. I'm still bullish on crude oil. There's a couple other pieces that I want to get to before I dive into some listener questions and get more to you, more of what you guys are asking for. Check out the dollar index. Holy cow. You wonder why. I'm not one of those people that's like, hey, look at me, I was so right. But how long have we been saying the dollar is going to keep rallying because the Fed's unwinding their balance sheet? And when they unwind that balance sheet, they're retiring dollars. You have fewer dollars in circulation and more people trying to buy dollars because they want to buy bonds, which are increasing their yield. We've been saying that for months now. Booyah. Oh, God, I hate using that one. I got to come up with my own mantra. We have ripped through 105, which was the target here. And now for everybody that's on board that long dollar trade, it's just a question of where's it going to go next. I'm going to have to zoom way out here on the weekly, going all the way back into 2000. Our dollar has not been this strong since 2001. And really, that's, you can see the next stop here. It looks like right around 106.5, 107. Well, we're at 105 right now. I mean, that could literally happen in 3 or 4 days, the way it's moving right now. And after that, the next target's like 119. It is a crazy period for the dollar. If anybody's traveling around the world, your dollar is buying you more and more and more. I basically just bought, going to Oktoberfest in Prague and Berlin and Amsterdam in October. Should be a fun time, but I'm hoping that the dollar keeps on rallying. Going to Europe? Yeah. Let's see this chart get even worse and worse. Let's see parity by the time I leave in August, so my money just buys me so much more. All right, one other thing that was really, bonds. Holy cow, bond market. We called this one as well. We've been talking about how 350 was the target. Look where we hit today. The high for the yield today on that 10-year was 3.44. Awesome, right? I love it. We broke above this high and closed above this high from back in October of 2018. For anybody who is very bullish on the market, this is one you got to look at and go, this is bad news right here. Why? This keeps on going. Again, more people are going to try, more foreign governments and foreign investors will be trying to buy U.S. bonds because it's quote unquote the safest. So as they go to buy our bonds, they need U.S. dollars to pay for that. They're going to sell their currency, buy U.S. dollars, which drives the dollar up even more. It drives the yield down because you have more demand, which will be a good thing. They can offer less yield. So yield might come down a little bit, but dollar is going to surge, and that means equity markets, not so good, my friends. Oh, the tangled web we weave with financial markets. All right, let me go back and look at some of your questions because there were a ton of them. You got to be a little bit crazy to be a trader. Yep, you do. And I think it's not about being crazy. I think it's just the ability to look at things and go, okay, this is what everybody's doing. I think I'm going to do the opposite. That has been one of the best things for me is when everybody's bullish on something, I'll start building short positions. And I've been wrong a lot, but there's some times where you hit it just right and makes up for all those small losses. Merlin, you're going to that one. I'm glad someone agrees with me. Going long? All right, for now, go long. A good trader loves his market. Go short, go short. Yeah. I mean, right now, yes. Coffee Merlin, yes. Too excited about the bears in the market. No, I just love I love this whole, I don't know what you say. I overuse the word ecosystem now that I've been talking about cryptocurrencies and digital assets. But the whole financial market structure I get excited about, especially the older I get and the more I learn all of the relationships and how this one impacts this. And I still don't know a lot of stuff. That's why I love having these guests on the program because they fill in a lot of blanks for me. Second quarter ends in 13 days. That will make us officially in recession. Time to be bullish on bear trades. Exactly. When we finally get that number that says we now have our second quarter of GDP declines, we are officially in a bear market, according to most economic data. Now, of course, the organization that issues the announcement that will officially say we're in a bear market, they don't only look at 2 consecutive quarters of GDP decline. That's just kind of what the industry tells us it is. There's a lot of other factors there, but that's a major one, right? So if you have 2 consecutive quarters of negative GDP, it doesn't mean we're officially in a bear market, but the odds are pretty good. What they need to start seeing is rising unemployment. They need to see high inflation, and of course, we're starting to see a lot of that stuff. So we'll keep our eye out there. But when you look at something like the S&P 500 here and see how much we are off the top, just for fun, let's go and do the magnet mode to there. If you go from market top to where we are right now, we're down 21.85% on the S&P 500. Now, it's funny because I have all of our quotes written down earlier this year. Yeah, earlier this year, I asked all of you what your forecast was for the S&P. Now, of course, we have a long way to go. We're only at the 13th of June, so let's call it halfway through the year. I didn't actually think we'd be down 20% at this point. I thought it would come like in September. So it's ahead of where I was thinking. And again, you guys might remember I said we'll be down. I think we'll be down at least 20% and then bounce up and close the year down around 15. So right now, I think I might be leading. I think I might be leading the competition. Of course, I don't know what the wager was for the competition, but I'll gloat if I win it. But I'm pretty sure one of you guys is going to win it anyway. Yeah, cheers. There you go. I do have my mantra is cheers and toast the camera. Makes me look like an alcoholic, which I clearly am not. I think it's how Brazil was 12%. Just figuring out how to buy those. Okay, so really important, Alan, if you're looking at buying Brazilian government bonds at 12%, remember, this is Brazil, right? That's not while it's more developed than some other countries like Ecuador or Chile, it's still teetering on that, third world status. It's not the same economic. It's not as reliable as buying like some EU bonds or British pound or Japanese yen or U.S. government bonds. So you're paying 12%, or you're getting 12%, but that means more risk involved. I mean, heck, you can go with I bonds right now and get 9+%. I would much rather be doing that than messing with Brazil. But anyway, how will we know the market is oversold? Good question, Indigo. So there is no way to say it's officially oversold, but there are certain things that you can look for. One of my personal favorites is climactic volume, and that's basically where all the lemmings jump off at the same time. And retail investors are fairly clear about that. So what I like to do is I'll show you here. Let's go SPY, just to give you an example. Here's the S&P 500, and I'm not sure why I have these lines on here. That one can go. I'll leave these vertical ones because I put them there for a reason. If you look at the real aggressive sell-offs, this is a weekly, right? So let's go to a daily. If you look at the real aggressive moves, this one here is specifically from 2020. Generally, when you have people panicking, you get exceptionally high spikes of volume. So you notice here, obviously during the whole COVID thing. Well, notice what's going on right now. Here back in January of 2022, we had an aggressive sell-off and really high spike of volume, right? You can see the volume spike here was roughly 202 million shares traded of SPY. Well, then it kind of calms down. But when you get these big sell-offs, volume surges. And I like to look for just climactic volume. Right now we're at 165 million shares. The average seems to be around, I don't know. It looks to be around 55, maybe 60, 70 million a day. So I'm looking for this volume to surge. I'm really happy with the way it's spiked up over the last 4 days because this is people panicking. But I'd like to see volume even higher. That's one of the main things I look at as far as a panic zone or climactic volume or market turning points is an oversold situation where prices have just plummeted and volume surges. Because at a certain point, who's left to sell it, right? It's that belief that it's just not going to go any lower and have a bounce. And I think that I'm playing that right now. My guess is you'll probably have a down day tomorrow. And then I think that what will happen is the Fed's going to come out and say, we're going to raise interest rates by 50 basis points. We are monitoring the economic condition. We are concerned about certain things, yada, 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 yada. But I don't think they're going to go 75 basis points. And I'm not the only one. If you guys look here, I can go and show you what the the Fed funds futures right now is. Huge jump from yesterday's close. Right now, it's a 31% chance that we see a 75 basis point increase on Wednesday. 68% that we move up 50 basis points. So you'll notice the difference. If you go back to a week ago, it was 3%. Like last week, as of Friday, I think we're at 3.2% chance. Now it's a 31% chance. So clearly this sentiment is shifting. But I got to ask you, is the economic data that atrocious for the U.S.? See, we didn't get bad economic data today for the United States markets. What we got was international data, which signaled that some other countries are hurting, primarily the U.K. So let's take a look at some British pound economic data that came out today. And I want you guys just to look at these numbers. I'm going to read them one by one. And I know we don't all think that the British pound makes the world go round, but it is interesting when you look at the results. So you can see here the top one, construction output. Previous month number was 1.7%, meaning they're growing, they're constructing, they're building stuff. They expected it to drop to negative 0.4%, meaning a contraction. They came out in line. So that's obviously very negative, but it met expectations. The second one is really important. You can see their previous GDP number was negative 0.1%, meaning a contracting economy. And they were all hoping for a 0.2% increase in GDP. But lo and behold, what happened? Negative 0.3. So they were going the opposite direction, or getting worse. So that's a big strike for GDP. Goods trade balance. They went from negative to 23.9. They're expecting to jump to 20.3. Came out worse than expected. You look at their indexes of services, it was 0.4. They came out at 0.1, worse than expected. Industrial production, they went backwards. They were supposed to go positive, came out negative 0.6. And then manufacturing production, they went from negative 0.2 to a full negative 1%. So these 4 or 5 check marks here, X boxes, really not good for the British pound. And I think that what happened is this is starting to spread a little bit of fear into the U.S. equity markets as to, hey, this does not look good for the U.S. markets as well. Now, if you notice the British pound today, let's take volume off this chart. I mean, for those of you in the UK, maybe Shinobi, oh, there's Shinobi right there. Yes, of course, it makes the world go round. That's right. Shinobi's out in the UK. This obviously is not good when you see the British pound against the U.S. dollar plummet like this. That means that ultimately what it means is if anybody from the UK comes to the US, they can buy less and less and less. And it's funny, a trader was asking me, what are the odds of the British pound getting to parity? There's always a chance that US and British pound gets to parity, but we'll worry about that down the road. That's a long ways away from current price. I think the euro will get to parity, but if we look at the weekly here, actually, let's go to the monthly, parity. That's off the charts, literally off the charts, way down here. So I don't see that happening anytime soon, but I think we'd all agree that the trend on the British pound against the US dollar since 2007 is in a pretty aggressive downtrend. And right now, I think we're at this inflection point where we've been bouncing off these lows going all the way back into 2016. We did breach them briefly during COVID, but it's just kind of sitting here. Let's move this blue line down, and I'll take everything else off. Right, so there you go. We're sitting at a really precarious point. I think if we get a close on a monthly below this line, then parity is definitely on the table. And I'm sure Shinobi would not want to see that happen. It means no more trips to the United States, but it might mean I can come over to the UK and finally afford a pint of beer. Man, it's funny. In 2000, I think it was 2002, I went over to visit my buddy in the UK, and I stayed at his house, and I took him and his wife out to dinner, but a couple of their friends joined us too. And I'm like, don't worry, I got dinner. And it was like, I think it was close to 2-1. And I remember the bill came, it was like $300. I'm like, I got it. And you just don't think about currency conversion if you're not, familiar with it. I get my credit card statement, like $600, it was 300. Oh yeah, 2-1. All right, let's see. What was the, I saw Joe, you asked this, and I want to make sure I get to it. Don't forget about my question about trend trading when the trend is down, but your asset is ripping through daily and weekly demand. Okay, so bottom line is when you have a situation where, in this case, you're talking about trend trading and we're trending to the downside, right? So if we look over here, let's go to the S&P 500 and look at the S&P futures, and we'll go to a daily time frame. And I might need to delete some of these lines. It's kind of getting a little bit messy for me. Okay. So in a situation like this, and this is obviously looking at the bigger picture we can look at on an intraday time frame. If you look at that price chart of the S&P futures, you've got things obviously selling off. And this last 4 days has just been unbelievable for the S&P futures. How do you trade that? How do you go short? Well, you can play the really risky side, which is just hit the sell short button and hope it keeps dropping. For me, personally, I'd much rather wait for it to rally back up to supply. Now, you can see right here, when we broke above this one, I actually closed all my shorts out and then actually rebought back in as we got a little bit higher on S&P and Russell. But normally, I'm exclusively looking to build short positions on bounces back into supply during downtrend. And I think the real answer there, Joe, is if I'm in an uptrend, how would you buy into the uptrend? You're waiting for pullbacks into demand. Well, if I'm looking to short a downtrend, I'm waiting for pullbacks into supply. And try to keep it as simple as that. Now, it's challenging, especially when you have a chart that moves as quickly as this one did. Where are you finding these supply zones? Well, maybe it's on the daily, maybe go to the hourly or 4-hour time frame. Now, unfortunately, we haven't seen any real pullbacks here at all since this whole breakdown below 40.84 started, right? It's just been pretty much straight down without any real pullback, which obviously is not a very positive sign. Hey, Jay Best, thank you so much for that. I appreciate it. Thank you very much. Let's see, is there any other decent examples? Gold is not a really good example. Let's see, crude oil would be a good example because that's obviously trending the upside. You look for pullbacks in areas of demand. And you notice right here, you had this big uptrend move, comes back down, hits the origin of this big move up here on the 26th of May. It doesn't always hit perfectly. A lot of trades I'll miss and just don't take because it didn't get to my level. If I'm feeling really aggressive, I'll jump on something before it comes to a demand zone. But I got to make sure my stop loss is extremely tight because that's the most important thing is losing money. So that's how I would approach it, Joe, is I'm just making sure that if I'm looking to short something that's trending to the downside, I'll be patient and wait for the pullback back up. A lot of us really feel like, I'm speaking for everybody here, but it's really how I feel. A lot of times you'll feel, oh man, I can't just sit on the sidelines as this market's crashing because I'm missing out on opportunity. And then you force the trade, and all of a sudden you end up losing a lot more than you wanted to. So I would really encourage just being patient. Let that trade come to you. If you miss trades, you got days where you're not making any trades, that's okay. I'd much rather somebody sit on their hands and not make a trade rather than force it and lose money on the trade. Let that market come to you. I think that's the easiest way. It requires a ton of patience. Is the bump 50 basis points or 75? The news says 75. No. And that's part of the reason why I thought that I should close my shorts, sell some puts because I think you're going to see the market rally. My belief is the Fed's going to say 50 basis points. I don't think that they're going to show their hand to be that aggressive because they can always increase another 50 basis points and another 50 basis points. If the sky was falling with regards to economic data, then maybe. But it's not falling. The economic data doesn't look good, but it's not apocalyptic, right? We haven't seen inflation jump like 10% month over month. You see that kind of number, then we got some serious stuff to talk about. But right now, inflation's jigging back and forth. It's not that critical. My guess is we'll see 50 basis point increase, and he'll say the exact same thing he did at the next meeting. We're really concerned with inflation. Inflation's a little bit higher than we expected, but we feel that these rate increases will slow down inflation, and we believe that the tapering also should impact and help those markets by removing money supply and thus helping with the inflationary data. What I think will be the really interesting discussion for me with Jerome Powell on Wednesday at the press conference is going to be unemployment. What does he say about unemployment, right? To me, that is really, really, really important because you are starting to see more layoffs come into this space. And I think that could be that next little straw that pushes us even further down. If we start to see unemployment data, the unemployment numbers start to spike. We already saw the unemployment claims spike up a little bit. It was higher than expectation, which is interesting. But 1 point data does not make a trend. So we have to wait for the data to show us. But I don't think anything's going to really happen that side out of the box by Wednesday's meeting. Now, that said, we do have producer price index numbers. And, of course, we know that the Friday number for CPI was atrocious. That was bad news. If we get something that's very high with regards to the PPI number, that may change the Fed's outlook, but I don't think it will. I think they're going to do 50 basis points. That's my stance. I'm sticking to it. What will Powell say during the news conference? Exactly what I just said right there, Les. He's basically going to be saying, we are concerned about the economy, but we have a lot of tools at our disposal. We have the resources to get inflation under control. We're going to take it at a moderate pace, very controlled. We'll be very transparent with the public about what we do and when we do it. But here's how we're going to do it. We're unwinding this much of our assets in our balance sheet. We're going to raise 50 basis points. And they're going to ask him at the press conference, is 75 basis points on the table for the next meeting? Well, let's go out here. This is obviously for the meeting that's going to be on Wednesday. But let's go to the next one. It's going to be in July. Okay, so July right now is pricing in that we will be between 2% and 2.25. Well, considering that we are right now, let me go back to here real quick. Yeah, right now we're at 0.75 to 1%, right? 0.75 to 1. And this would be a 50 basis point jump to 1.5 or 1.75. So if we go to the July 17th meeting, the markets have effectively priced in a 75 basis point increase. They're pretty much saying that in the July 27th meeting, we are going to see a 75 basis point increase. And that number has surged significantly over the past weeks. You can see here that a week ago, there was only a 14% chance. So the market a week ago had priced in an 85% chance of there being a 50 basis point increase at the meeting on Wednesday and also in July. Now all of a sudden, they're saying that there's a 50% chance that we're going to see a 75 basis point, a 50 and a 75 by July. So it'll be pretty interesting. PPI 11%. Oh, that would be brutal. Interest rates 12 to 50%. That's how bad it's going to get. I think so too. I think you're absolutely right. I think it's going to continue to drift up. Oil prices, you look at this price chart of crude oil. This is not helping. Here's the weekly. This is not helping with inflation. You guys remember back here, I think this is when Ruben was on the program all the time. It was kind of funny. And I was saying, guys, if you can get oil at anything under $20, load the boat. Load up the freaking boat on this thing under $20. And I had some triple leverage longs. I forgot the ticker symbol. It was CCO or something like that. And I made a great profit. I'm looking back in hindsight going, I wish I held that thing. Holy cow. That one trade right there could have probably turned me into a millionaire with as big a position as I had. But this is not helping the inflationary data. This is a major piece that's driving prices up. And that's just one aspect of it. We could look at a lot more pieces here that are helping inflation run. But I just drove 1,300 miles since Friday. That cost me, let's see, 120, 110 is 230, plus another 110 is 340, plus 75, $415 worth of gas for me to drive to Northern California and back. I mean, it was a pretty expensive trip. That normally would not cost anywhere near that. I mean, I've gone a couple years ago. I was like, a couple $100. Fine. Next time, I'm flying. Once it's a consensus, what is the consensus estimate for PPI tomorrow? Right now, here's the picture of it. Here's PPI, and you can see, I'll highlight it with the little, change the color here. Let me see if I can make it bigger for you. The previous month was 0.5%. They're expecting it to jump to 0.8. Now, what's interesting about this picture is notice where it was, right? The previous expectation was 1.4, and we came out at 1.1. Now, when I say previous, I meant for the month of April. You go to May's number, it goes from 1.4 all the way down to 0.5. So huge drop. And everyone's like, oh, inflation's under control. Everything's great. We're going to do fine. And then all of a sudden it spikes back up. So my guess is you're going to be over 1%, over 1 here. That would, I think, is where we should be and where we'll be at, is jumping up over 1%. They're expecting 0.8%. But if you look what happened with CPI, let me go back here and show you Friday's CPI number. Here's Friday's CPI. Notice the same picture, right? Back in April was a really big up month. Oh, come on. A really big up month. We were all the way up to 1.2 on the April number for CPI, which is Consumer Price Index. Then all of a sudden, we have May's number come out, and everyone's like, oh, inflation's great. We're under control. And then June came out way higher than expected. Right? They were expecting it to come out at 0.7. It came out at 1%. So, I think you're going to see a similar picture. I think you're going to see PPI come out over 1%. And if that does, that obviously shows that inflation is not, in fact, under control, as the Fed wants us all to believe. Let's see. I also took profits way too soon on my oil and gas shares. Yeah, it's okay, Mario. Don't think about it. Don't worry about it. I've done it a million times. You'll torture yourself on shoulda, coulda, woulda. Remember, they're the three richest people in the financial market. Should've, could've, and could've, would've. What about year over year? That doesn't give me year over year, but it's considerably higher. It's all annualized data here. So if you look at something, let's go back to go to the PPI numbers for tomorrow. These are all monthly numbers. So you got to take the previous 12 and average those out, and that gives you your annual rate of PPI inflation numbers. So unfortunately, the way that they report it here is just a little bit different. I can imagine driving away from California, no interest though, and driving. Well, I love California. For all the problems, you can complain about this or that or the other thing, and or wildfires and all the. I love it here. I got 73-degree year-round temperature. Some of the most beautiful beaches are 10 minutes from my door. I can ride electric bikes. I can go skiing in 2 hours. I can go to Las Vegas in 3.5, 4 hours. I love it. I'm good. I can go to Mexico in 3 hours too. 2 hours. Anyway, let's not talk about that. Shinobi, sorry if you missed out, but do you think that there will be a risk that ETH could collapse? What do you mean could? Look at the price chart of ETH. I think ETH, you mean like totally collapse and disappear? No. I personally don't think so. I think there's too many things tied to its ecosystem, but it is definitely collapsed. I mean, this has been an absolute bloodbath for Ethereum. I'm bullish on Ethereum long term. I just think they have to prove and finally get off their ass and make proof of stake work on Ethereum. They've been talking about it for way too long. It hasn't happened. So, the old phrase, shit or get off the pot. Well, Ethereum has to show that they can convert this thing from proof of work to proof of stake. If that doesn't happen, they will continue to drift lower and lower and lower and lower. What causes inflation to drop so much in May, then spike figures? Yes, I forgot exactly what it was. There was a couple factors where the price of those things dropped significantly, but I think it's manipulated. Ever since I got a chance to interview a guy from the Bureau of Labor Statistics, and he says, yes, we do cook the books on CPI and PPI numbers to fit a political agenda, I immediately just went, no, I don't trust you. I don't trust that data. But it's not a factor of me trusting the data. It's really saying, what is that market telling me with the data, right? All right, let me do a couple of questions here. I meant to get you. I always encourage you guys to comment on the YouTube channel because that's, I think, helps the show somehow. I don't know. So I'm going to read a couple of those, and I want to get to this one because I think it's really important. Yu Yang, thank you for all the questions you send in, my friend. He says, I wanted to share something that I learned the hard way this morning. I put a market sell order for my option in the morning, my lazy ass, and the option is sold around $600 lower than the price I used. Do not put market orders. 100%. Absolutely, guys. I haven't put an options trade out where I use a market order in years. I'm always going to be using limit orders. Especially if it's not just for options either. It's for futures products. It's for equities. Hell, it's for cryptocurrencies. You need to know a couple things before you put a market order. Number one, you need to know how your orders are routed. Are you going direct access or are you being sold like somebody like Robinhood? Then you have to look at the liquidity of that market that you're trading. If you're trading options on something that's very thinly traded or doesn't have a lot of open interest, that spread is going to get huge. And yeah, you're going to get hosed big time. Same thing on a futures product. Let's say you trade rough lumber. It's not that active, doesn't have a lot of volume. This spread gets real wide. So you do a market order, it's going to have a lot of slippage, especially when you do a market order in a very low volume time. So he says here, I put a market sell order for my option in the morning. It may not have been a very active time or maybe been a thinly traded security. And all of a sudden you can get really bad slippage. So market orders, to me, should only be used as a stop loss mechanism. And yeah, even that can be dangerous. And one of the things I like to do, and I think I mentioned this before, is I run a scan for things like stocks that I'll trade, and all of those have to meet a certain volume threshold or I just don't trade them. Remember, I don't care about the company. They can make nuclear bombs or toilet paper. The only thing I don't touch is Apple, Cisco, and drug stocks. That's it. Everything else I can trade. So I'm there to try to make money off of price action. So I don't care about volume. I don't care about, sorry, let me rephrase that. Volume is incredibly important. I have to make sure that it's liquid enough for me to trade. If it's not, I move on to something else. And that's even something that I show in the crypto classes. Bitcoin is not the same on every exchange. It's completely different on every exchange. So you got to look at and make sure your trading ones have good liquid. Well, what causes inflation to drop? Oh, you already went to that one. Kathy Wood's advice. When everyone at the buffet gets explosive diarrhea, run and grab another. Ugh. I know you're joking there. That's pretty funny. But that's pretty much what she's saying, right? That's pretty. She's. I mean, if you look at the ARK fund, I would say you could make the argument that this is explosive diarrhea. People are running for the door on her ARK fund. Now, look, I think there's probably some great holdings in here for the long haul, but you got to set rules for yourself. Until ARK starts making some higher highs, forget it. Leave it alone. Same thing for MJ, right? This has just been down Periscope for years. So, yeah, set rules, set parameters. No problem, Chris. Good to see you. Market orders in crypto? Yeah. Oh, yeah. Market orders are the worst in crypto. Absolutely the worst. All right, so let's see. Let's make sure I'm not going over an hour. I can't let Big Eb win. Les, and thank you, Les. You always send in great questions in the on the YouTube channel. Celsius said it was pausing all withdrawals, swaps, and transfers between accounts due to extreme market conditions. Binance also temporarily paused Bitcoin withdrawals. If withdrawals are halted, how does this add to crypto being the future for financial transactions? So, one of the things you have to understand is the two issues that you're seeing here today, and this is what's causing a lot of the crypto collapse, is what happened at Celsius. A lot of people are calling it a rug pull, which basically means they're taking all the money and running. I don't think that's the case, but there's some real shady crap going on at Celsius right now, which makes me nervous. With regards to Binance, they froze because they said they had some issues with stuck trades on Bitcoin, so they paused. My guess is to reboot servers. They were back up and trading was okay. Crypto transactions on centralized exchanges are vulnerable to theft. They're vulnerable to bad actors. Now, part of the issue with Celsius is they have your private keys. If anyone here is in crypto and your exchange has your private keys, what does that mean? I'll make it easy. If you have a Coinbase account, if you have a Kraken account, if you have a Binance account, if you have a OKCoin, if you have Abra, if you have Nexo, if you have Celsius, if you have Voyager, if you have Crypto.com, they all have your private keys. So essentially, it's their crypto. To me, that's the problem. Now, you could use things like these. I have a couple Nano Ledger S's over here. This is the X, but the Nano Ledger S looks pretty much the same. And I keep a bunch of crypto on these devices. I own my own private keys. So when somebody like Celsius basically says we're freezing all transactions, I have $20,000 right now sitting over at Celsius that, for all intents and purposes, could disappear. Now, I don't believe that that's going to happen. Although there was a weird transaction. They moved $320 million off of Celsius onto FTX shortly before they froze everyone's accounts, which has the whole crypto world going, oh shit, this is not good. So, to me, this is part of the problem with crypto is it's still developing. Now, to Les's question, what does this do to the future for financial transactions? I don't believe it does anything for financial transactions. What it does is it casts a lot of doubt on centralized entities and these startup exchanges, right? What I think is going to come of this is there'll be more regulation. There will be governments come in and say, hey, you want to be an exchange? You have to meet this. You cannot put your investors' capital at risk. Right now, Celsius makes a lot of money from lending out cryptocurrency. Now, what could also be happening here is all their loans at Celsius are collateralized loans. So let's say I have $10,000 worth of Bitcoin. I put that $10,000 worth of Bitcoin up, and I can get a $5,000 loan at 0% interest at Celsius. Great, right? It's an over-collateralized loan. But if Bitcoin falls to a certain amount, Celsius will liquidate that Bitcoin position. So it's forced liquidation. And I think because you had such a sharp down move in cryptocurrencies, a lot of people who had loans that were collateralized are now being forced out. So I don't know how Celsius has their balance sheet or what it all looks like, but my guess is a large reason for what's happening in crypto is because Celsius may have lent out beyond their means, right? They have these collateralized loans, but they're taking that collateral and using it elsewhere to make money, and now that system caught up with them. So hopefully it all pans out and I can get my money out, but I will be moving most of my money off of these centralized exchanges, unfortunately. You think Michael Saylor is getting a bit nervous now? A lot of people keep saying that Michael Saylor is going to have major problems because, remember, they have a $205 million loan that they got fully collateralized with Bitcoin. I don't know if it's fully collateralized, but it's collateralized with Bitcoin. And the price point of liquidation for that loan was $21,000. So everyone's saying, if it gets to $21,000, Michael Saylor's forced to liquidate. Bull pucky. It's not going to happen. Microstrategy has 90,000 Bitcoin that are just sitting there doing nothing. So what'll happen is they will put more Bitcoin in to collateralize it, and I would not worry about MicroStrategy defaulting on that loan. They won't get liquidated. They're just going to put more Bitcoin to collateralize that loan. It's not that big of a deal. So I'm not concerned at all. I mean, MicroStrategy looks absolutely horrific right now, and the long haul may actually be a decent buy. You are right near this area where it just traversed sideways for a long time back in 2020. I'll be moving my Bitcoin off of Celsius if they resume it. Me too. I'll definitely be moving my stuff off there. I'm in the process of moving mine back to my Nano Ledger X. Yep, same thing here. I'm moving mine, at least the bulk of my Bitcoin. Thought Alex from Celsius was reputable. So did I. I actually tried to interview him and get him on the show, and he said, no, I'm not interested, but that doesn't make him not credible. It just makes him a busy person. All right, let me real quickly... Les actually asked this one, so I can double dip on Les's question. Can you look at MicroStrategy today? Yeah, well, there's MicroStrategy. I mean, obviously, the sell-off today is this big panic sell, down 25%. In the long haul, and this is a risky thing, but in the long haul, you got to look at MicroStrategy, and if Bitcoin does turn around and start to accelerate back up, MicroStrategy is going to move huge. It's going to have monster moves, but you're down almost 90% off of its highs right now. I would wait. I would wait again for this thing to start to make some higher highs, higher lows before jumping on it. But yeah, I'm not a big fan of MicroStrategy at this point. Let me see. I got a bunch of questions that came in, but I'm out of time. So I've got questions from Michael and Joe, KF, Les, and Zanzibar, which I'm going to get to on Wednesday's show. And tomorrow, guys, I have a leadership meeting at OTA that I have to be a part of, so I won't be here. Where do you buy your Nano Ledger? So this is actually really important. Do not, I will repeat it one more time, do not buy your Nano Ledger on eBay or on Amazon. It's very easy for somebody to buy one, open it up, take this device out, write down your seed phrase, package it all back up, put saran wrap over it, some little seals, and you think you have a pristine device. Only buy these from the Ledger store. So you go to ledger.com, make sure it's the actual Ledger company, not some phishing site, and buy them there. Do not buy them from any other site. You just run the risk. Remember, the private keys, it has what's called a seed phrase, which basically means your private keys are all on this device. If someone has access to that seed phrase, they have 100% access to your cryptocurrency. It's kind of funny. In the CIL session I did the other day, I actually showed them my seed phrase for my Nano Ledger. For my MetaMask wallet. I was freaking out because I had a bunch of money on there, and I was like, oh, great. So I went out, I made up another MetaMask wallet, and I transferred everything over, and then we're safe. But yeah, you show someone that private key, they can do anything they want with your capital. So make sure you only buy it from the Ledger store. I can't emphasize that enough because, I mean, I even buy, like shirts. On Amazon, I bought some Calvin Klein shirts. Clearly fake knockoffs from China. I was like, this is not Calvin Klein. I bought Oakley's off of Amazon. They were fake. Clearly fake. So I just don't trust it. Do not buy from anyone else other than the manufacturer. And even if you're going to save 20 or 30 bucks by buying it on Amazon, do not do it. Yep, go straight to Ledger. GME, oh man, it's funny. I saw a few GameStops. You say GME holding up nicely. I think the main reason you're seeing this hold up nicely is because you have all these diamond hand Reddit users who are like, it's going to go back up to $300-$400. No, it's not. This thing's going to zero. GameStop's going to zero. Mark my words. GameStop is going to zero. It's going to take some time, but over the next few years, this thing is going to zero. There's no doubt about it in my mind. I'm 99% certain of that over time. This is blockbuster for video games. Bye-bye GameStop. If you're holding at 118, just the writing is on the wall for the long haul. Their shorts are coming back into this and pushing it down. Remember, institutions have far more money than the little Reddit traders with, $1,000 to their name. No, not going to have them. All right, let's see. Get the hell out of crypto. Yeah, for many people, get out of crypto. I, for one, am staying in it. I'm a believer in the technology of blockchain, of all that stuff. So anyway, Big Ev is not partying soon. Cut to it. His party ends right now. Here's your economic announcements for Tuesday. I forget what day it is, but here's what's happening for the 14th. As you run through this list, there's a lot of actually really big stuff, and I think it's important because you have all these CPI numbers coming out for Germany, which is important. You have unemployment rate for the UK. You have the ZEW economic sentiment report coming out for Germany and the EU, and then really the big news will be 1 hour before the markets open tomorrow. That's going to be in the US. Our PPI numbers come out. All eyes are on this one right now. It is really critical tomorrow what happens. You all see down here, there's a bunch of stuff coming out for China, but I don't usually post the China economic data because I just don't trust the data that comes out. But China is reporting a lot of stuff coming out tomorrow. So that's pretty much it. There's really nothing on this calendar for earnings. It was interesting seeing Oracle. Oracle reported earnings today, and after hours are up 12%. So even though the markets were down, here's the chart for Oracle right now. You can see they closed down at $64. Well, it's right back up at $71.80. Interesting. What do we say about things that are trending down, short the rallies? Tomorrow might be a very interesting opportunity for anybody looking at Oracle because it's been sliding for 4 days straight. Earnings come out, which are really good earnings, and they jumped right up into this overhead supply area. May make a great trading opportunity. Again, do your due diligence, practice your risk management, and I think Bitcoin's going to 10,000 myself. Big Eb, oh, damn it. He got it. I was trying to cut out. I had to show the economic calendar. There you go, Big Eb. Happy holidays. There's your Christmas present. Anyway, I hope you guys enjoyed today's show. If you did, go out to you can go to the YouTube channel, ask questions there, and I will get to those on Wednesday's show. I'm going to have David Warner on the program on Wednesday, so I may actually have to push some of those questions to Thursday. But David Warner is going to be on the program talking about the British pound, the euro, the dollar, the Japanese yen. Be a total 4x day on Wednesday, and then tomorrow, of course, I won't be doing a show because I have a meeting. But anyway, thank you guys so much. Hope you had a fantastic weekend. Hope you're as excited for this market as I am. It's going to be a wild, wild week. I can't wait to talk about it. I'll see you guys on Wednesday. Take care.